What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, tomorrow is the big day. Investors have eagerly and cautiously awaited for the Federal Reserve's sentiment and outlook on what is going to change going forward. In this video, I'm going to break everything down for you. But before we get into it, there's one thing that is certain. With the VIX over $30 and the volatility and fear as high as it is, the market is going to react in a very strong manner, whether it is to the positive or to the negative. So stick around for this video. I'm going to cover everything, and it's something you're definitely going to want to know before tomorrow. Let's get right into it. First off, let's start at the two main things investors are looking at. We've talked about this before. I'm going to highlight it again. And then at the end of this video, I want to give you a little bit of a history lesson on what has happened exactly in times of high inflation. We'll cover that in just a moment. The first thing is, nonetheless, how much the Fed is going to raise rates. Okay, now I've showed you this chart a few times. Right now, I'm going to go back to the May. This is the probability chart and where investors and how much the market has already priced in. The current fund rate is 25.50. Now, that 50 basis point hike has been on the table for quite some time. All right, now we've all talked about this before. The market likes certainty. As long as they do raise rates by 50 basis points and not going wildly to 75, that's going to provide a little bit of confirmation to investors. Okay, we like the stability. You said this was going to happen. This is certainty. There's no shocks, no surprises. And as you can clearly see right now, 100% of the market has already priced this in. They're also going to want to look for any hints on what the Fed plans on doing in the future. All right, now there has been talk about the 50 basis point hike for not only in May, but also in June. And there was some talk of the 75 basis point hike, but a lot of other Fed presidents had said, listen, the 75 basis point hike is way too aggressive, okay, especially because it takes time for them to factor in how the actual rate hike, has affected, especially with such a short period of time, and that a 75 basis point hike would crash the economy. And there's been a lot of Fed presidents and other analysts, that have stated that as well. However, when you look at the June probabilities, considering we're targeting 75, 100 right now, the market is 96% priced in for a 75 basis point hike in June, okay, and another 50 basis point hike in July. So that's why we've heard me talk about a few times saying that investors are pricing this in just a little bit too much for the short term. I think they're long term by the end of the year targeting that 2.5 to 3%. Is on target, but I think for the short term, they're pricing that in a little bit too closely. So that's the first thing you need to know into tomorrow's meeting. The next thing is, what is the Federal Reserve going to do about its $9 trillion balance sheet? Now, quantitative easing had ended in May. The last time the Fed reduced their balance sheet was between 2017 and 2019. It did it by $50 billion. They had hinted at a $95 billion runoff per month. All right, now if the Fed comes out anything that's a little bit more aggressive at that 120, 125, the market's going to need to adjust to that. So far, if they continue with that $95 billion runoff, all right, especially at the start, and I can see them doing that, that's going to provide more certainty. And like I said, look for a bounce to the upside. Okay, now, like I said, also too, if anything does get raised from this, expect the market to sell off quite hard, and it's going to be breaking some technical levels of support. And obviously, it doesn't just happen over, one day or a couple hours. At the end of the day, it's going to carry on for, the following weeks to happen. Next thing I want to talk about is inflation. Now, UBS had stated, and I've talked about this, that they predict inflation to have reached its peak. Something that we haven't talked about is how the stock market actually reacts at times of high inflation, okay? And more so when inflation peaks, okay? But before we get into it, a couple things I do want to cover. Gas prices have changed. All right, now I've noticed it a little bit from my surrounding areas. You can see here we are up just a hair. All right, from a month ago, a week ago, we were up, what is it, about 2% on the regular. However, here's where the change, I think, will hit inflation numbers, all right, especially with the PPI a little bit higher. All right, that's the producer price index, is diesel. All right, and right now the current average is 537, up from about 510 a month ago. And where I'm at in Connecticut, I've seen it as high as $6 or more. All right, and everything gets transported by truck, and they burn a lot of that diesel, and that's going to get passed off to obviously the consumers, but first onto the providers, and then it'll come down to us as well. So that is going to have an effect going forward. Next thing I want to talk about is home sales. Now, mortgage rates have risen. We've got the numbers here. You can see the spike that is at the end of March. From what I hear from people clients I work with that are loan officers, there's still a lot of competition out there when it comes to cash buyers, and they don't really expect to see home prices really cool off probably until I'm thinking the May numbers. It might not be the April numbers, but more or less of the May numbers when they are released in June. You might see a little bit of a pullback. Now here you can see it rose all the way up until 2021. Once lockdown restrictions started to ease a little bit, all right, and that initial rush of buyers were just coming out and sellers looking to move, and everything was changing so quickly, you saw a little bit of a cool off, and I would expect the same thing to happen, which clearly is going to help with inflation numbers. Okay, now last thing before we cut this off, I do want to talk about what I said I was going to at the beginning of this video, is how the stock market reacts when inflation has peaked. Okay, there's been a few times, I'm not going back to the 50s, but just more specifically looking here in the 70s when it was very high, which we've talked about, all right, and you've heard all over the media talking about the 70s and 80s and what they're comparing that to as well. All right, they are talking about obviously the 2008 housing crash. In 2008, the market, the inflation peaked at about, I think it was that July to August in 2008, and the market didn't fully recover or start to recover, I should say, all right, until about February of 2009. There was a couple other issues going on with everything that happened, all right, with the banks. And like I said, that is a little bit different than we're going through right now. All right, obviously we have liquidity issues, we have over leverage issues. All right, but when it comes to the falsifying and on just the amount of information that was unknown to the public, okay, and even to the institutions as well, is a little bit different than what we're seeing right now. But when you compare this strictly to inflation, what we're looking at, like I said, you cannot only look at technical levels or one factor, but when we're focusing on inflation, if you go back to the charts in 1974 to December, November 1974, and back to where we were in about May of 1980, the market reversed because it shows that, all right, inflation has peaked, we're on to the downside, okay, and we can continue moving back up to the upside. So there is an argument for that to continue to happen. There are two things, and I've said this, and I'm going to continue to say this. I'll look quickly at the SPY chart before we end this. I do not feel that this, 405 we just recently hit is quite as of the low. I really was pricing in anywhere between 385 and 395, but I also do feel that making a stretch to all-time highs is really not far-fetched. You've got to look at other fundamentals when it comes to price earning ratios of some of these companies that are still reporting. AMD, I think I just reported that about 71% year over year growth. A lot of things got to get factored into this, but let's take this one step at a time and just know tomorrow what the two things you're going to be looking at are going to be the 50 basis point hike and the $95 billion a month in the balance sheet runoff. So that's it for this video, guys. I'll see you in the next one.